Hey guys, Matt here. Welcome back to this week's portfolio update. I like to show my portfolio once a week, somewhere around then, as that sets me apart from other stock YouTubers out there, and that I show my receipts. And honestly, compared to last week, yeah, we're doing better and better. And as a matter of fact, so I'm obviously recording this today on Friday. Thursday, you can tell by looking at this that I was actually in the green. You see a lot of red here, and that is, I mean, it's obvious, but things are looking better. Just compare this to last week's video. Things are looking better. I mean, Gevo, we are just above a 10% loss. Palantir, yeah, it is certainly a far cry from the 20s, but I mean, Palantir got as low as $66.50, somewhere around then. And yeah, things are inching their way back up. AT&T, I mean, we're still at a gain, so that's good to see. Now, in this video, I am going to talk a little bit about the drop-off today and why I think this is fantastic news. And yes, the huge downturn today, I think is fantastic news. And I'll talk about that in a second. But before we do that, let's take a look at my recent moves. Now, in case you don't know, every month I put $1,500 into my Fidelity portfolio, and then I dispense it into stocks as I see fit. The only stock I bought this week was ARK. I took advantage of a downturn a few days ago. Now, on some days, it's pretty difficult to determine why the market is up or why the market is down. Today is not one of those days. Today it's pretty obvious. Stocks drop after strong jobs data renews rate worries. So, yeah, you read that right. The stock market dropped because of a good reason. Now, I'm not going to read this. You can pause and read this if you want to. But basically, the Labor Department showed 390,000 jobs were added in May, which economists had expected 318,000 jobs. So this was a total beat. And why this is bad for the market, well, you can call it short-term bad for the market. On the long term, I think this is fantastic news. But basically, this gives a nod to Fed policymakers to continue with a more aggressive rate hiking cycle. Now, I think this is good news over the long term because, yeah, it's easy as short-term investors to look, oh no, the Fed is raising rates. That means stocks are going to drop in the short term. That's terrible, but it's really not. I mean, a strong economy is good news, and I think we need to look past the short-term downturn that it's going to cause for stocks. A lot of it is the Fed's fault that we got to the inflation level we got now, because the Fed began lowering interest rates because of COVID, and then they kept them low because they called inflation transitory. Now, I mean, in hindsight, they were very, very wrong about that. But so, yeah, I think the Fed got us in a situation, but the Fed is also trying to fix it. Now, the Fed had to do sort of a balancing act. Now, I'm not a financial guru, or I don't have an economic background, so correct me if I'm wrong, but the Fed had to do a balancing act. And basically, if the Fed rose interest rates too aggressively without a strong economy to back it up, they could cause a recession. But if Fed didn't raise interest rates aggressively enough, they wouldn't battle inflation. So the Fed had to find that balance, and the strong economic data, it means the Fed can fight inflation as hard as it needs to without causing a recession. And honestly, if this aggressive rate hiking cycle is what's going to give the Fed the ability to battle inflation, I mean, I'm all for it. I say bring it. Let these stocks drop in the short term. I'll keep capitalizing on this, and I'll keep buying stocks. And in the long run, I mean, once the economy reaches some sort of equilibrium, yeah, I'll be all the richer for it. So, yeah. Now, speaking of capitalizing, what is my strategy going forward? Now, for starters, I probably won't be buying any more Bank of America or Cisco. I've said this in previous videos, but I'm sort of on my way out with these stocks. Not right now because they're both down, but these were the first stocks I ever bought. And nothing against either of these companies, but I've owned these stocks for 3 years or so. I'm just done with the stock. So eventually, I will sell out of both of these positions. I plan on taking the proceeds and investing them into an ETF that tracks the S&P 500. So that's what I'm going to go. It'll give me 2 less stocks to worry about, but since, S&P 500 ETF is pretty much a set it and forget it type thing. That's my goal for these two in the, I guess, the medium term. But as far as what I'm buying, I'm probably going to be focused on probably 3 stocks as of now. The first one was ARK, because honestly, the huge downturn, especially with with related to interest rate hikes and stuff like that, I don't believe it has anything to do with the underlying companies at all. So yeah, I'll be pouring my money into ARK, but I don't think much more money into ARK. Maybe 8 grand or so is the max amount I want invested. The next one is Palantir. Palantir is a whole winner in my book. I have a video on Palantir coming out in the next few days, which I will go into detail on that. But yeah, I think I want to get this to a $10,000 max investment. I think I've decided on that. Once I get that, I'm going to stop. But until then, I will probably keep buying more as long as the price keeps staying this low. And the third one I'm thinking of buying is Facebook, but it has to drop a little more. I want it to drop below my cost basis before I add any more shares of Facebook. I do love the company, but I have to buy the company at a certain price. But anyways, take care, have a great day, and eat your vegetables.